What's going on, Ape Nation? It is Sunday, October 3rd, 2021. It is a miserable day here in the Northeast. I hope it's nice wherever you guys are. Real quick, before we get into the video, I just want to give a shout out to Australia. We can finally put Australia on the map. Bosco from Australia put a comment down last night in the video, and that's our 10th country now that we have viewers on, so that's really cool. I'm excited to add the Aussies on. And guys, in Australia, just know that the American people have your back on these lockdowns that are draconian. There's no need for it, and it's completely out of control. If you haven't seen the videos coming out of Australia, they're ridiculous. Because of these lockdowns that they have, the whole east side of the country is basically on lockdown. And that's led to this.
We also have 375 people with COVID in hospital at the moment. 81 of those are in intensive care and 61 are on a ventilator. Of the people who were in hospital yesterday, 78% were vaccinated and 17 were partially vaccinated.
What?
78% were vaccinated and 17 were partially vaccinated.
What?
So seems to be working well. Everything is going well in Australia, I guess, as far as the health ministry is concerned. And just to get back to some of the comments from last night, people were saying that I was misquoting how much money David Portnoy had donated to small businesses. It said 30 million in the article, but as of July of this year, it's actually 41 million. So the figure I had is correct. It's just I didn't find the article in time to upload to the video last night. And finally, to everyone who liked the videos last night, man, you guys did a hell of a job. We got like almost 4,000 views from that video because you guys were helping the algorithm along. So I really appreciate it. You guys, I happened to mention it last night, and I got the most likes ever on a video. So thank you guys so much. I appreciate all of you helping out to get this information out to everyone. All right, now let's get into the subject at hand, which is Cathie Wood and Dr. Michael Burry, and where is this market headed? We're going to talk about Cathie Wood's argument for a bull market and innovation, increasing the GDP substantially, and Dr. Michael Burry, who also has his opinion, shorting the 20-year Treasury bond and shorting Cathie Wood's, specifically her innovation, ETF, and Tesla, which is one of her biggest holdings. And we'll see where AMC is going to land in this battle of the minds. But before we get too far ahead of ourselves,
cue the speeder.
And you just said that on camera. This going viral.
guys, thank you so much for crushing it and getting me to 1,000 subscribers. If I haven't earned your subscription yet, this is the way. All right, boys and girls, let's jump right into this. Let's see what Cathie Wood's take on innovation and what the future holds for this market, and see how her argument holds up against Dr. Michael Burry's argument. And in the end, let's try to see if we can figure out where does AMC fit in this picture. But don't let me tell you what Cathie said. Roll the film.
We've been saying for some time that the risk to the economy is more on the side of deflation than inflation. So as COVID created all the destruction that it did, and supply chains really being thrown off, we've been through a period here of inflation, which I think investors are baking into the cake. That's the underlying assumption out there, that we're in an inflationary period and that it was turbocharged by the supply chain disruptions that occurred during the coronavirus. I am a student of economic history, and I've lived quite a bit of it myself. So seen a lot of markets, and started in the business during the 70s. I was in college when inflation was raging. So I know what that is. And I truly believe we are not going back there. We are in a period today like we have never been, never. I mean, you have to go back to telephone, electricity, and automobile to see three major technologically enabled sources of innovation evolving at the same time. Today, we have five platforms: DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology, all of which are deflationary, and not just by a little bit either, a deflationary bust. And we agree with them in this respect. We think it's going to be balanced by a deflationary boom. So that's where we differ. But where we agree is that there are companies who thought the world would never change and have been, again, catering to short-term shareholders who wanted that extra penny or two in earnings, and so got it by having the companies leverage up and take more debt and shrink the number of shares. And they've also been focused on dividends. They are probably saddled with products and services that will become obsolete because of the record-breaking amount of innovation taking place today, and that some of the companies that we own, the stocks we own, they're not in any index out there. So a lot of public market investors aren't exposed to them, but we think there are going to be a lot more of those opportunities going forward. There will be a lot of job displacement. There will be, no question about it. In fact, when we started our company in 2014, Oxford University had just put out a piece which said, and it was about the United States, that said 47% of all jobs in the United States would be lost to automation and artificial intelligence by 2035. And they left it there. Hair on fire, headlines screaming, a lot of fear about automation. We got the question every meeting. And what they had neglected to do, which we did, was finish the story. So with automation and artificial intelligence, productivity is going to go up dramatically. We think more than it ever has. In the year 2035, because of automation and artificial intelligence, we believe that GDP here in the United States will not be 28 trillion, which would be, if you drew the growth, linear growth, that's where it would be, but instead will be $40 trillion. And it is our job, focused only on innovation, to figure out where that extra $12 trillion is going to come from. And
all right, guys, so I'm going to cut it there. That is a bold prediction that instead of the normal increase that we see in GDP year over year, she is saying we're going to have a massive spike to 40 trillion in GDP in the next 10 to 15 years. And I can't say that I disagree with her, because I think that she's correct on the fact that innovation and technology, just like maybe that you used to pay, a lot of money for a computer, a laptop. Laptops used to cost like over $1,000. Now you can get one for $200 at BJ's or Sam's Club. Not the best brand, but you can still get a laptop that works and functions and you can use on a day-to-day basis. I think she's onto something with that point. And guys, just something I want to point out real quick. Cathie Wood had an excellent year last year. A lot of people had an excellent year last year. But before we even got hit with the pandemic, back in February 2020, Yahoo Finance, and this article is from Bloomberg, said that Cathie Wood was one of the best investors you've never heard of. And if you look here at her ARK Innovation ETF, it came as the top out of the top 10 funds for total returns. She came in number one at 165.2%. So she is definitely someone that has intuition and a good feel for the market and future possibilities of where we could be heading. And so I think it's important to keep that in mind, as well as Dr. Michael Burry's track record, which is also impeccable when it comes to his predictions. So I'm going to touch on Michael Burry's argument now, And unfortunately, we don't have any tape to go by. We just have articles that he's been quoted in. And so I'm going to pull from those to tell you what his perspective is and how it differs from Cathie. And then we'll try to figure out where does AMC fit in this and what can you do to hedge yourself as apes in this community besides just AMC and GME. Where could you hedge against a huge inflationary period and a market correction that could be coming? We'll talk about commodities, a few other things. May save that for another video, but at least I'll touch on it today. All right, so now let's go to Dr. Michael Burry and what he has to say about the market going forward. And this article is from Markets Insider, and it's written by Tharon Mohammed back on September 27th of this year, so just a week ago. It says the title, "The Big Short Investor Michael Burry warns the stock market boom reminds him of the dot-com bubble and rings the alarm on options mania." And so I'm sure everyone out there is familiar with who Dr. Michael Burry is by now. But it says here in the opening paragraph, Michael Burry said the current market boom reminds him of the dot-com bubble. And I just want to give you a personal aspect on this. A good friend of mine who works at Fidelity, I spoke to him about 2 months ago, and the first thing I asked him when we talked about the market, I said, what kind of feel do you have out there for what's going on right now? And his exact words were the correlation between the 2000 dot-com bubble and what we're seeing today, especially with over leverage and using dark pools to trade. He's never seen anything quite like this time period besides the 2000 bubble. It also goes on the article to say, moreover, the hedge fund manager compared the bull market during the 15 years to 2000 to the run-up in stocks over the past 15 years. He highlighted a 94% correlation between the NASDAQ 100's performance in each of those periods and a 95% correlation for the S&P 500. It goes on here to talk about the Scion chief also drew a parallel between the surge in people trading options on meme stocks such as AMC Entertainment and the mass speculation that preceded the Wall Street crash of 1929. Now, I know I have preached on this channel for months now to stay away, if you possibly can, from AMC options. I have never played an option on AMC, and I don't plan on doing it. I don't think we have control of the market right now, and so I think it's a bad bet, but that's, of course, just my opinion. It goes in and talk about the housing bubble of the mid-2000s, how Burry was correct on that. They made the movie. The investor also bought a stake in GameStop and wrote several letters to the video game retailers board in 2019, laying the groundwork for the short squeeze on the stock this year and the broader meme stock trend. He recently tweeted a picture of a subpoena he received from the SEC ordering him to cooperate with the regulator's investigation into the GameStop saga. I don't know if you guys have seen that or not. I haven't mentioned that in the videos recently, but this is true. He mentioned something on Twitter that he had been sent a subpoena for his information into what led to the GameStop squeeze. It goes on, Burry has been sounding the alarm over Twitter for several months. He warned dangerous levels of speculation in meme stocks, cryptocurrency, and other assets will lead to the mother of all crashes. Scion was butting against Elon Musk Tesla, and Cathie was ARK Invest as of June 30th. All right, guys, so what can we take away from these two different important people who play in the market, what their speculation on the future is going to be, and where does that leave AMC? Here's what I can tell you. And we only have a short time frame to really work with here with AMC, right? We've only had the last 10 months to look back at historically what pattern has AMC followed. And if Cathie Wood is correct, and I think her prediction may be a lot further off than, say, Dr. Michael Burry's is, they might not be working in the same time frames exactly. Cathie Wood has come out and said that Michael Burry does not understand the innovation disruptor that these 5 different technological advances will become. I think Dr. Michael Burry understands it quite well. I just think that he is looking at the very short term, like maybe the next 18 months, as opposed to years down the road. As more money is dumped into the economy, AMC traditionally has followed a lot of tech companies as they go up and down. And again, it's a short time period to look at, but in the last 10 months, we have traditionally seen AMC follow some of the other tech plays that are very popular, the other meme stocks, if you want to call them that, or stocks that are highly touted on social media, whether it be through Reddit or Wall Street Bets or YouTube creators, whatever the case may be. It seems traditionally we have followed that pattern. So if Cathie Wood is correct, then we should see good things for AMC going forward. Now, what about if Dr. Michael Burry is correct? Well, here's what I'll say to that. If Dr. Michael Burry is correct, then that means we're going to see some pinching and some pullback, which means there's a good chance that the hedge funds will have to get out of their riskier plays because the banks and lenders are going to try to rein in any cowboys out there, especially people who are still trying to short GME and AMC. They clearly aren't going anywhere. And this, of course, is my opinion. I believe that either way we see this turn, AMC and GME could be great hedge bets against inflation if it's necessary, or if we start to see the market head, like Cathie Wood says, and we're seeing innovation in tech becoming more and more popular, then AMC should rise as it historically has with other tech stocks. And I said to you guys at the beginning of the video, I would at least touch on one of the other places where I think you could hedge your bet against inflation, and that is with this right here. Hear that sound? What I'm holding right now is a 2021 South African Krugerrand. So this is a coin that's minted in South Africa, and this coin in particular was minted in 2021. And if you have noticed recently, silver prices are way down right now. They were down around $20 last week, and that's when I purchased these Krugerrands. It's back up now to $22.56. But if you look back at 2008, right before the bubble burst, the housing bubble burst, silver was at an all-time low. And in the next 18 to 24 months after the crash, silver went from, I believe, $19 an ounce to $49 an ounce. It had a remarkable run back in 2008. Let me see if I can pull up the chart. And this week in a video, I'm going to talk about commodities. I'm going to talk about silver and gold and other hedges for inflation. We'll get into it. I want to have transparency with everybody out there that's watching these videos that takes the time to comment and like and view the videos. I want to make sure everyone's on the up and up. So I want to let you know exactly what I'm doing. And by all means, this does not mean follow what I'm doing. I'm just letting you guys know places that I am looking in order to hedge against inflation. And I think commodities, silver in particular, is a cheap way right now that you can use to hedge against inflation. All right, guys, so I'm going to leave it there for today. I hope you guys enjoy the rest of your Sunday off before we go back to the grind tomorrow morning. And I will be back tomorrow with the video about AMC and whether it's still a movement. I believe it is, and I'm going to argue that point in tomorrow night's video. So I hope you guys will come back and join me. Again, thank you guys for all the support. Thank you for everything you've done for me. I really appreciate each and every one of you. This is Ape Nation. I'm the Massalorian, and I'm going to watch Tom Brady make history.